Good morning. No, your point is correct in the sense that so the base is very high. And so we had the extraordinary 2021, I think one of the best year on record. And also, let's remember that after COVID in the second half of 2020, also the going was pretty strong. So it was inevitably at some point in time to have a slowdown. That, of course, this unfortunately has coincided with a difficult geopolitical situation. And therefore, at least 2 months out of 3 have been relatively underwhelming in terms of activity. The only maybe canary in the coal mine is the trading, because of course we have also a very big pickup in volatility, especially in March, especially rates volatility, which potentially could tamper a little bit this mostly corporate finance, slump in investment bank fees revenues.
Impact of Russia's aggressive invasion of Ukraine and the ongoing war there on banking. It might seem strange to some people, but of course some banks have had to sever ties with Russian financial institutions, whilst other banks must be doing pretty well in commodities trading.
Yes, exactly. I mean, commodities, they've been very strong, not only oil and gas, but also soft commodities, if you think of cotton and the likes, and also agricultural commodities, because of the importance of Ukraine and Russia for the global supply chain in food. And therefore, I mean, so all banks that would still have some commodity as a sort of legacy from Dodd-Frank data, I think so they will do rather well. Of course, I mean, we need to see whether the spike in commodity will compensate the dry up in especially equity and in debt capital market, because also debt capital market has been very underwhelming, especially in February.
Filippo, I want to ask you about the news out yesterday around Capital Group reportedly offloading a 5% stake in both Commerzbank and Deutsche Bank. We saw shares in both those German lenders tank yesterday. Is there something particularly downbeat or concerning about Deutsche Bank and or Commerzbank, or do you think this is probably a call on the European banking sector just generally?
Well, yes, I mean, it could be constructed as a call on the European banking system, but at the same time, when you offload almost 5% of the stock at 7% discount, that's based on public information, or at least disclosed in the press, then of course it's going to have an impact on the clearing of the share price of both Deutsche Bank and Commerzbank. I think it's to some extent as well, it seems to have been a very good trade for this asset management company. On the other side, I mean, it's a bit paradoxical, because we could be in for the first raise right in almost 8 years in Europe, because I mean, the ECB is expected to bring the deposit rate from negative 40 basis points to 0 at the end of the year. So I think this would eventually be very beneficial for at least the income statement of both Commerzbank and Deutsche Bank.
Anything in particular about the loan loss outlook for either of these German lenders that should be of concern?
Yeah, at the moment, the asset quality development has been very benign to both Deutsche and Commerzbank. I think also the big question mark is around, let's say, commodity price, and whether the commodity price, especially the oil price, will tip the Eurozone into recession, which I think also there is a increased risk of that. At the moment, we're not quite there, but of course, I mean, if the oil price were to surge above, say, $200 a barrel, then I think it would be very difficult for Europe to fight off recession. Of course, also we know recession is not very conducive to the banking business, because collecting the loans they're given out also becomes more difficult. Yeah.